Hi, John from York Bay Financial Partners, looking at the investment markets. Another week and another mixed bag of signals from President Trump. So it started off with him looking at placing 50% tariffs on the EU trading bloc, because apparently the trade negotiations were just going nowhere. He also came out and floated the idea that Apple would have to have a 25% tariff on their iPhones that weren't made in the US. But then a day or so later he comes out and says actually the EU tariff has now been postponed until July the 9th. No further talk on the Apple tariff, because it's just virtually impossible for Apple to build all their phones in the US and sell them at the current prices. Firstly, there's not the infrastructure in place. They haven't got all the componentry there, and like I say, it's just impossible at present. But what was more interesting was that he implied that Apple would have to just absorb the tariffs. He's also going to be launching a war on the judiciary. He's got the ongoing dispute with Harvard. He's also pardoned a couple of TV celebrities that were imprisoned for fraud and tax evasion. And certainly on the tax evasion, that seems pretty clear, black and white. There's no sort of interpretation on that. He's also coming increasing pressure as well for his private crypto dinner for the top sort of, I think it was 250 holders of his crypto meme coin. And then supposedly the top 25 owners would then get a special presidential sort of tour and a one-on-one sit down with him. Now, certainly on the Harvard issue, it's quite interesting because he keeps on sort of claiming that they're sort of breeding terrorists and sort of left-wing policies are being pursued by these universities, but yet he does very little to sort of condemn any of the violence that's taking place in Ukraine from Putin and Russia, and also the senseless killing in Gaza as well. Indeed, the longer it goes on, it just looks like Putin's just stringing Trump along. But he did have one little bit of success. He managed to get the one big beautiful bill through the House by one vote. It's now going to go to the Senate, and that will be certainly a much tougher ride because, traditionally Republicans have been very sort of anti increasing the deficit. This sort of tax cuts that are in the one beautiful bill, etc., that will increase the deficit by approximately $3 to $4 trillion. Although according to Trump, it will actually save about 1.2 to 1.4 trillion. But he seems to be the only person who believes that. Now, the real key has been the bond market, because that certainly doesn't take any prisoners in terms of sort of interest rates, etc., and what it feels will happen to the deficit. And certainly the 30-year is around 5%, the 10-year is just below 450, and the 2-year is just around 4%. Now, they are all up over the last 3 to 4 weeks, which gives a pretty clear indication of which way the bond market feels the deficit is going to go. Now, oil is back at 61.60 and change. A bit of a spike up in the UK and the inflation there. Came in at 3.5 versus 3.3 last time, but still looking for the Bank of England to cut interest rates further this year to support the UK economy. Now in the EU, they really don't know where they stand with this sort of Trump tariffs because, one day it's on, next day it's off. Now it's been postponed until sort of July the 9th. And it's just going to be interesting to see how it all plays out. Now in Australia, after the Reserve Bank did cut interest rates by 25 basis points last time, taking the cash rate down to 3.85, still looking for sort of 2 to 3 more rate cuts this year. But interesting as well, looks like Albanese could be about to tinker with the tax rates on the Aussie Super. As yet, it's unclear what the sort of bill will be for the recent flooding in the New South Wales area. But after the flooding in Queensland earlier in the year, those sort of repairs and refurbishment bills will get the economy going and sort of push things along over the next sort of 6 to 9 months. Now here in New Zealand, as expected, the Reserve Bank cut interest rates by another 25 basis points to take the OCR down to 3.25. Implications are that potentially we're still looking at a further rate cut in the next sort of 2 to 3 months to take the OCR to 3. But then looking further afield, potentially by year end it could be down at 2.75. Obviously, while that's good news for mortgages, it's not so good news for savers. Also, changes to the KiwiSaver under the budget, looking at increasing the minimum contribution rate to 4% over the next sort of couple of years, but also as well halving the government contribution from 521 down to 260. So again, with those regular contributions going in, potentially for the New Zealand equity market, that should give a further little boost as we see more buying coming in on a week-to-week basis. Now, on the back of that OCR cut, we've already seen most of the major banks have cut their mortgage rates, and indeed some are now below 5%. When you've got maybe sort of 50% of the mortgages to be reset over the next sort of 3 to 6 months, that's going to make a big difference to the amount of disposable income. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz. Follow up to interesting articles, and we look forward to speaking to you soon.